way financial products are accessed is about to change dramatically. Soon, many more of us will be able to access wealth management services at any time and any place within a single click. On top of this, customers increasingly expect products to be more personalized and easier to use. This presents a unique opportunity for financial services to become an integral part of people's daily habits, as many things already are. Collaborating between banks and third parties via the use of application programming interfaces, or APIs, is an efficient way of getting scalable products to market. Hello, my name is Jade Cano, and I'd like to welcome you to aixigo's panel discussion on embedded wealth. I have my esteemed guests with me today, who I'm going to introduce to you straight away. Starting with Arnaud Picou, who is the CEO of aixigo, a financial technology provider which enables financial institutions to deliver scalable and personalized wealth management services. Jonathan McPhail is from Finastra, the largest pure-pay financial services software company globally. Finastra is an enabler of banking-as-a-software solutions. Jonathan advises organizations on how they can enable their own banking-as-a-service offerings. Johannes Neulinger is the head of business development at Allianz Global Investors and is responsible for the distribution of digital investment solutions. And Sven Siat is from Six Group, the operator of the Swiss and Spanish stock exchanges. He is the product lead of B-Link, a platform where financial institutions can connect with third-party providers and vice versa. Good morning to you all.
Good morning.
Morning.
So I'd like to start, good morning. I'd like to start with you, Arnaud. Can you tell me what embedded finance is and why this is something that clients want?
Thank you, everybody, and good morning. Good morning, my dear colleagues. So maybe let's start with maybe a little bit of definition. What do we mean by embedded finance or embedded wealth management? And then we will maybe look at from user point of view. So in my point of view, let's say embedded finance means really enabling any brands, financial or non-financial, basically to integrate new financial services into their new proposition and customer experience. And at the end, it's everything about transforming or expanding the distribution channel. So that's pretty what it means in terms of definitions. And at the end, it's sort of an interplay or trilogy between financial regulated FI, fintechs or fintech plurals, and also network of distributors that have access to the end user. And if you take some example, for example, you have example in the retail side where you can see a flexible finance, for example, at the point of sales or in the transport, where you embed the payment into taxi apps, for example, or in a travel, where you start having a travel insurance when you start booking a flight, and so on and so on. So you have many different examples that are already live and already happening. So this is probably the way I will define them, but I will also leave my colleagues to, if they want to add more in terms of definitions. Now, why it's important from the customer, and rather than just looking at the end user, let's look at, we are all customers of someone. So if you look at the entire chain, why, for example, for financial institutions regulated, why it's important. So it's basically, for them, it's very important to be able to expand in a very cost-effective way. So that's super important. Then is also a way of redesigning a new business model that will keep and making them relevant. That's for the financial institution. For a fintech, it's basically the new evolutions. It's a way of transforming also and creating new business stream and new business revenue by getting more and more value for each customer. And at the end user, probably the winner, it's all about having sort of financial services in a real context, basically when they need it, what they need, and where they absolutely need it. So that's for them a big win. And finally, when you look at everything around, I think it's a non-stoppable trend about well-being of democratizations. For me, embedded finance for the end user is sort of invisible wizard that really help every individual to reach their goal, regardless of their income. So that's the way I would like to answer now in terms of definition and why it's important for every customer. And as I said, the customer is not only the end user, but the fintech is also a customer, or the bank is also a customer. That's the way. And at the end, is as a first conclusion, embedded finance really benefits to the entire chain, from the regulated FI to the fintech to the distributor to the end user. Everybody at the end of the day is a winner of this embedded wealth management or embedded finance.
Okay, thank you, Arno. You mentioned quite a few players there. Now, Jonathan, you at Finastra, you work with a lot of these players, and you're very much involved in helping institutions get their banking as a service systems up and running. How easy is it for financial institutions to add external services to their infrastructure, and what kind of setup do they need to do so?
Hey, Jada, it's a great question. I think to start, you mentioned that this really is the inflection point of the way financial services are consumed. So that's the first point we need to come at this from. And it's really quite a big shift, because the customer journey, or the customer interaction point, very much moves from that traditional financial institution through to the owner of the, as we call it, the captive point of context. So that is the customer journey that they're undertaking as part of their whatever process they're in. So they're not going outside to interact with a financial provider directly. They need to be able to consume that financial product within their existing customer journey. And so to enable that, the front end, the user experience side of things, then we consider the next step in the chain are the enablers. And so these are, as Arno mentioned, the fintechs that help those distributors embed the products in their user experience and in their customer journeys. And then we come to the providers. And so these are the financial institutions that hold the license to provide those products. They're obviously key to be issued and consumed, but they do need to change the way that they approach the market to take what we see as a massive opportunity for them. And so to do that, they really have three issues they need to consider. One is the strategy. So that's deciding consciously that they no longer need to own that point of context, the customer interaction point. That may sound straightforward, but for many organizations, it proves to be a challenge when it comes to rolling out that strategy across the organization. The second key point, obviously, is the technology. And this very much relies on them being able to expose the capabilities they have with APIs, as you mentioned. So traditionally, when they owned the point of context and the manufacturing and the ongoing servicing, that wasn't so much of a challenge. But having to expose those services in a way that can be consumed by users in a completely different point of context is not so easy. So it's really much a move towards open APIs and open finance. And then third, a point that's really need to consider is very important, is how do you monetize the new paradigm? We don't own the point of context. And it's very much a partnership model that again is a change in strategy from the entire chain within a single organization.
Okay, thank you very much. Johannes, coming from Allianz Global Investors, a financial institution with its own funds and products, can you tell me which opportunities financial service providers see in embedded wealth?
Yeah, sure, absolutely. So first of all, I absolutely agree to the point that these financial products are accessed will be really changing dramatically in the future. So if we're looking in the current environment, we still observe that the majority of customers really prefers to have a trusted advisor on their side. So it's really not the case that if you're looking at the financial industry, that the people are doing everything self-directed. That's simply not the case. So the majority of people are looking for a trusted advisor. But on the other hand, the expectations in terms of information availability, digital accessibility of information and content and also tools which help the customers to navigate through their wealth. This expectations has grown significantly in the last, I would say, really in the last 36 months. So here, embedded wealth is really a cool and interesting solution for distribution partners as well, because I really see here three main opportunities. First of all, the services can lead to far more customized service offerings compared to the one we offer right now. And this more customized offering will then finally lead also in a better customer experience. And then in the end of the day, this will also result in higher revenues for the financial service providers. The second point, and this is something which is also new, if you have a quite well-established embedded wealth offering, you as a financial distributor, you are far quicker to offer additional products and services on your platform. Now, so right now, if you want to launch a new product, this takes months. You need to do an NPP, and you need to do market analysis, and then you need to train your staff. And if you have a really lean embedded wealth offering, you can simply add products to your shelf and see if your customers are demanding that. And that's far quicker going to market strategy, which you can have here. And the third big opportunity is, of course, cost. That's absolutely clear. So a good embedded wealth strategy will finally lead in lower cost, which as well as for the financial service provider itself, and of course also for the customer. And this are for me the three biggest opportunities in a well-established embedded wealth offering. And we from Allianz GI also really strongly support our distribution partners in building up such solutions together with aixigo.
Now, Sven, Switzerland has taken a different approach than the EU in relation to open finance. How has this affected the progress within open wealth, and what does it mean for fintechs wanting to do business with Swiss institutions?
Yeah, if we look at it in a simplified way, there's basically two approaches. There's the regulatory approach, where the banks are forced to offer interfaces by the regulator. And there's what we call the market-driven approach, where banks and fintechs get together and then they decide what interfaces should be offered and where can those interfaces actually add value. The downside of the regulatory approach is that most banks only offer what they are forced to by regulation and not much more. In the EU, this is payments, and it doesn't go much beyond that. In Switzerland, the banks and the fintechs got together and they decided, looking at the Swiss financial market, it's really key to offer open interfaces for banks and fintechs to connect in the space of wealth and wealth management. They actually got together in an open wealth association and defined the rules. How should these interfaces look like? And the result in the end is that we are much more advanced when it comes to offering those interfaces in the space of wealth management. And ultimately, everything that we talk about, these open interfaces are the foundation then to build the embedded wealth services that we just mentioned before.
Okay, thank you very much. So Johannes, let's try and get a little bit more concrete here. You've partnered with aixigo. Can you tell me what exactly it is you've created, what you've done together?
Yes, sure. So Allianz Global Investors is one of the global leading asset management firms, and our fund products are really distributed all over the world. And we have a strong interest, of course, that our strategic distribution partners really have innovative, holistic investment solutions on their end. So therefore, we really support our distribution partners in building up new digital investment solutions, which we co-create. And for that purpose, we on our side have developed a digital investment engine where our partners can access our core capabilities, for example, portfolio construction, portfolio analysis, portfolio allocation services, research and content directly via API. to build up new innovative investment solutions on their side. And here, aixigo is our very close cooperation partner, because we use the services from aixigo and their platform to offer that service package as a holistic offering to our distribution partners, where then we can build up together in a co-creation product, new innovative investment solutions. And here we are partnering up, of course, with aixigo.
Oh no, why do banks need to engage more with their clients, and how can they improve their efforts in doing so?
Okay, so I think that there's probably maybe a different point of view, a different way of analyzing the phenomenon, but I will take maybe two visions. The first is obviously competitions. The competition is increasing from the non-financial, let's say partners that are, or fintech that are entering into this business. Banks, the intermediation threat is not just like something hypothetical, it's actually happening. So for a bank, just doing nothing is probably not an option. And embedded finance is certainly a way of moving from intermediation threat to certainly a real opportunity by regaining the control and continue to be relevant. So for me, is one of the first reasons why banks need to rethink their model, and it also comes to the economic factor. It's true that according to a recent survey that has been published by McKinsey, the economic profit is declining for the financial institutions, and that has been accelerated with the COVID. And in the same time, we have also seen that their business model has not changed for decades. And we believe that actually embedded finance and embedded wealth management is a fantastic opportunity to rethink beyond the previous business model and start to looking at either any way of creating something we could call like a digital business model. And that, in my point of view, the real opportunity beyond the threat. So there is a competition factor, an economical factor that really pushing the bank to rethink. And now to do that, I think it has been explained, the how is exactly, it's impossible to do it alone. And that's what has already been said by all the different other speakers. It has to be a collaborative approach. It's moving from competing to collaborating and establishing sort of a trilogy between regulated FIs, fintechs, and distributor, and work together towards a new offering. So that's the way I see it.
Great. So before we get more into how all the collaboration works and so on, I'd just like to ask you, Sven, do you agree that banks is not an option to do nothing? After all, Switzerland in particular has established itself quite successfully as a wealth management hub. Do banks here really need to, or wealth managers really need to change their services? And what are the advantages that they can get from embedded wealth?
Yeah, it's a fair question, and I would like to bring in a little bit different contrarian view. If you look at Switzerland, the population, we have an increasing pension gap. So the security of living in the later stage of our life, and a large part of the population of our life is not secured. Second part is the financial literacy is still a big topic. So we don't have the financial literacy in all of the population that we would like to have. So you could argue, yes, wealth management is quite established in Switzerland, but it has not done a good job for the entire population. And this is where we believe embedded wealth will do mainly one thing. It will be making wealth management services more accessible and more approachable. So what does it mean? What we're observing is the creation of communities. This is driven by social media. This is driven by us all having smartphones. And those communities, they start to address a certain group of people. In Switzerland, you can take the example of LX. It's a community that's been started by very prominent women, and they are addressing women, and they talk about financial literacy, but also how to deal with professional life, entrepreneurship, so different topics. They're really creating a community around that. And we believe these communities, they will start integrating financial services. First step we already seeing that. They will just simply refer the community to existing products. But we believe embedded wealth management will enable them to really become their own wealth manager, their own embedding wealth management services into their ecosystem. And this really then will really bring wealth management services to first this community, but we think there's going to be many, many more communities addressing different groups of people. And this then for us is the democratization that we've heard and talked about before.
Thank you. Okay, so are there any security issues around this, or are there any dangers of sort of mixing up, financial services in environments that aren't typically the place you would go to get financial advice? Is this something you could perhaps speak about, Jonathan?
Yeah, I mean, it's a good point, but I think the key is that the partners that are involved in this and their overall chain need to are those which are cognizant of the security implications of interacting through the relevant technology. But to pick up on the original point that Johannes made earlier, is that people like to interact with trusted brands when it comes to financial services. So yes, there's a technology angle in terms of how do you interact with across organizations and ensure that that flow is secure and data is not going outside. But you need to make sure that those financial products and services are still offered via a trusted brand. So you're not going to have necessarily, going to, I would say, not everybody's going to be providing wealth management capability. It's going to be the relevant point of context, and that's picking up on Sven's point. The point of context is key. So it's which point of context would particular communities want to interact with. And in wealth management, compared to other use cases you might see in consumer lending or in small business lending, I think those points of context are very much more consolidated in wealth management. So you're really looking at where either do I have a community, as Sven said again, or where does my income get generated from? And that's where we do see organizations like, you take organizations in the gig economy, for example, with delivery providers or holiday accommodation providers. So those points of context where you may be actually getting your income from. A lot of people are starting to get more and more of the income from these points of context, or the traditional ones like employers. And so I don't think it's going to be a huge number of embedders that are relevant, but it's got to be the right ones. And so that addresses part of the trust and security issue as well. So it's not about making every single website or company you deal with provide products. It has to be the right one. And then on the technical side, that's why you have to have the right partners to ensure that the connections are secure. And obviously this is all backed up by a regulated licensed financial institution at the end of the day.
Thank you. So I'm hearing a lot about collaboration and how revenue is generated. Maybe Arnaud, you can tell me how this changes the business model of banks and financial service providers, and tell us how revenue is made. Is it the platform provider, the service provider? And essentially, I'd like to also ask you who owns the client at the end of all of this? So
obviously, in the chain, I think every layers are making revenue, are making money, and it's relevant. So that's pretty sure. Otherwise, you don't even start. So if you start looking at the point of contact, the distributor, for sure, for this layer, it's all about more customer retentions and have additional services that can be provided to their current customer. So you can measure retentions, and then that has an interesting effect, but also you can get cut on every new services that you can provide and basically extend again the business. So it's become more relevant and have a true larger offering, which makes sure that every customer, when they need something, they always come to the same marketplace. So that's the first layer. For the fintech, obviously, it's all about accelerating the adoptions, moving from the old traditional on-premise or on-site license to a more, let's say, user consumptions, API consumptions, getting more and more revenue for each customer that connect and that consume some of your services. So the business model is also changing, and then from the traditional license to more adoption consumptions. And for the banks, is basically for them the opportunity to continue to deliver more services and continue to be relevant. So I think we could go in each layer, and I'm sure Jonathan has also have some example about monetizations. And as what I have seen so far is every layer has redesigned and redefined because this new approach and new way of going to the market. Now, who is owning the end user? It's an interesting question. I'm not sure it's like who's owning the customer. I'm not sure that actually anyone is really owning a customer. Now, if you look at the entire end-to-end chain, obviously the distributor is the one who has access to the customer. I'm not sure we can use the word own. I'm not sure they really own it. Actually, at the end, every layer own a portion of this customer in different way. So I'm not sure there is one owner. There is multiple owners depending on which journey in which step we are. Maybe my colleagues wants to elaborate a little bit more about ownership and business model. I don't know if
on the business model. I'll just add to that. So in recent surveys we've done and research we've done together with McKinsey, we've identified that globally there's a 7 trillion opportunity for embedded banking, embedded financial services by the year 2030. So that means that there is certainly a good reason for going after this market from the financial and providers' perspective, but also from the distributors. And I think the key is that the way that these are monetized are really in more of a revenue share or a share across all the different parties, because the whole point is that the additional revenue is being generated. This is net new in many cases, and I think again going back to Sven's point about Switzerland and how maybe the share of the wealth management capabilities across the entire population hasn't been there to date. This were by enabling the relevant consumption of the wealth products at the point of context, creates additional revenue. It's additional services that aren't consumed today. So that additional revenue and sharing across, although it may seem it may seem to take away from financial providers as a first point, it is actually creating additional revenue that is then shared across the different parties. So although it's less of the pie, it's a much bigger pie that everybody is sharing. But it has to be relevant for all the players. So the distributors, enablers, and providers would all take a piece of that. Although having said that, it's often the providers who will get the largest piece, because this goes to the ownership side of things. So although the user journey and where those financial products are provided is owned by the distributor, the provider is still, again, the licensed entity that has to comply with all the regulations, that has to have those licenses in place, that has to have the systems and applications to do that. And there's a cost to that. So obviously we do expect them still to retain the largest of the overall revenue. But the opportunity is so great that there will not be an issue with sharing that across the other players.
Yeah, and maybe with regards to the question of who owns the customer, I think that question is, and I know mentioned it already, one of the problems why maybe some banks cannot understand how to get into this space, because ultimately there behind that question lies a belief that I can hold the customer captive, and that's not, the reality is that's not true. So the banks and institutions that we see starting to make first steps into this field, they don't think like that. So it's really a different way of thinking about customer, how to bring services to the customer. And the banks that are successful in this, they start to understand there's also an interesting business, even if I'm only in the background, banking as a service, I'm taking care of the regulatory part and similar things. And that is also fine. And we see banks actually driving a mixed approach. For some customer segments, they fight for that client interface, and for some customer segments, that say I'm totally fine enabling other brands to deliver those services, and that's going to be the future in our view.
Okay, so it sounds like it's not just a change in business model, but obviously with that goes sort of a change in mentality and in working
Absolutely.
culture as well. Johannes, would you like to maybe perhaps explain how that has changed or how that's about to change for finance institutions and how they adapt to this change? Seeing themselves perhaps as a platform rather than a bank, does that cause a problem?
No, absolutely. This is a really good discussion here, because this is also something which each financial institution needs to think about. What is their strategic view about their service offering in the future? And if you make it really, if you're looking at the top, there are two business models you can choose. The one, and this is probably more the traditional one, is you can still say, I'm the factory. So I have a factory approach. That means more or less I want to produce the most of my products and services I'm going to distribute to my customer by my own. That's the typical traditional approach. And here, if you really have a very good infrastructure setup, that your USP is a low-cost production, then this is, to be fair, still absolutely feasible and a fair strategy. But here, your USP really needs to be a low-cost producer. And the other one, that's the, I think I would say, more modern business model, which really many financial institutions have already chosen, is the typical platform approach. And here you see yourself not as the whole production hub for the services and products. No, you really see yourself as the platform for your customer, where you enable also third parties and fintechs to offer services to your customers. You will be still the platform owner. So I would say you will be still also the account owner. No? So it will be still your customers, but you really develop a digital ecosystem, which is allowing you to plug in different services and products which your advisors could distribute to their customers, and which also, of course, also your customer could directly acquire by their own in the online banking or mobile banking. So this, I would say, are the two big strategic moves you could do a financial institution. And this is really completely depending on your on the environment. So if you have a really good access to your customers, and if this customer access is your USP, then probably the platform approach would be the right strategy. And if you really have a lean infrastructure setup where your USP is low cost production, then I would still say the factory approach is the right one. But these are the two major business models we see arising. And of course, we from AGI, we support our partners to go for the platform approach, because out of a customer view, of course, the platform approach would be the more desired one in the future.
Okay. Okay, so I would go on to my last question here and ask you if embedded wealth management can actually encourage sustainable investments. Who would like to go first?
I can share a personal story. My partner, she has not really invested a lot in her wealth, so that in her life, so that financial literacy topic came up, and I recommended her to use a robo-advisor in Switzerland, and I just sat next to her to see how she clicked through, and what that robo-advisor did really well was explain at the time when it came to deciding the strategy of investment, explaining the different options and actually presenting quite well an ESG option, explaining what it's doing, explaining the ups and downsides. And she ultimately then actually chose to go for that ESG option. So everything that she invested is now in an ESG centered fund. So that example, I think you can, if you really tailor and explain, again, making it approachable, it can really drive that investment. And I truly believe that more people would invest in ESG if you present the option in a way that's easily understandable.
And maybe I just continue on. I think I was about to take also a personal example with my daughter, who struck me about reject, and she's 21, and she was rejecting financial service because it looked like it was not green enough. And I was just like, I would have never even thought that she would have been aware about it, but that's looked like something very important. I will take therefore another let's say example, or let's say viewpoint, which is today when we look at our prospect or existing customer, there is not a single new request about wealth management without green economy, sustainable, ESG, that should be part of it, that should be a constraint in the portfolio constructions as a trigger point. So when you look at this kind of huge demand, I can see that actually, yes, it's definitively, in my point of view, an interesting, let's say, vehicle to encourage the green economy.
And to add also here the investment view, I mean, probably far the biggest driver is here, to be fair, the regulatory changes we see due to MiFID and the sustainable finance regulation coming up this year, because that finally will also lead to far more transparency for the customer. Also, the product providers and the fund providers are really working quite hard to deliver completely new data to the distribution partners about sustainable investments and about the quality, the sustainable quality of the investments, which then in the front end really allow the advisors and the distributors to inform their customers in a completely different way about the sustainable impact of their investments. And this trend is really just starting. So this will be one of the key major trends we see in the next 3 years, that here a completely new way of data and information will be available, so that the end customer really have a new level of a new service level here.
Thank you very much. Okay, with that, I'd like to close our panel and maybe just add a few thoughts. I think having spoken to you all, it seems that embedded finance is about to revolutionize the relationship between financial institutions, their clients, as well as among financial companies themselves. Established wealth managers cannot ignore this development, or they will be squeezed out by new market entrants or risk exodus of unsatisfied customers. However, the new opportunities created by open financial ecosystems can also be embraced as an opportunity. On the one hand, new distribution channels can be created for an institution to offer its own products and services to third parties, while on the other hand, an open network can also be used to obtain individual resources from specialists in line with demand. So, before we go on to the final conclusion, I'd like to give a few words to Arnaud.
Thank you, Jed, and thank you, dear colleagues. So definitively a very passionate topic, and there is definitively probably more to discuss, more to look at that. Of course, there is not only one point of view. There are many different type of, let's say, a way of looking at this opportunity. This is, I can see among this already panel, this kind of collaboration, and we cannot do it alone. It's just impossible. And I think even on the Allianz side, just reaching their dream and expectation in terms of financial desire, it's not going to happen if there is no a distributor or no fintech, and for Finestra or even on the partnering side is the same. So definitively, it's a way forward. Embedded wealth management is a fantastic topic. Maybe I would like to also take this opportunity to ask one more question about financial distributor versus non-financial distributor for the wealth management. I understand that obviously the original and the obvious target is more like financial distributor, especially for the wealth. It makes sense and more sense, and the business case is strong. And I think Jonathan, you're summarizing and everybody's speaking about that. Nevertheless, we start having more and more cases with non-financial brand starting, let's say, looking at, yes, we have already done embedded finance, such as opening an account, credit cards, some facilities. But now our customer, based on the survey, wants us to take care of and then take care of more about their needs and future needs, which not necessarily is retirement. So how do you see that coming? Is it just an accident, or actually this is something that is going to grow, or will take time? What is your your vision about the non-financial distributor for wealth?
Well, from my perspective, I think it goes back to the point earlier. You have to have the right point of context. So in wealth management, we very much view that it has to be a trusted party for one, like we mentioned before, but it has to be, I would say, one where that context is relevant to wealth management. And so that means where you're going to get income from. It can't, I mean, I don't view that, you know, if you're a member of a football club and they offer you wealth management, for example, that doesn't make sense to associate it to their brand. But if you have some level of income coming in from somewhere, it makes perfect sense in that non-financial company to add the ability to consume wealth products. So that's why we say platforms like Airbnb, or if you're a freelancer and you're getting income through the freelancing platform, or in the gig economy, if you're an Uber driver, you know, having the ability to not just get cash from those organizations, but also have investment advice and products that you can consume, that makes sense.
Johannes, do you have anything on your side? Or?
Yeah, we had a lot of discussions also with non-financial distributors. The fair answer is, for them, Europe is not the first step. The regulatory environment in Europe is simply not interesting to start with. And if you're looking for global firms, they always prefer to start with that kind of service in Asia, because here the regulatory environment is far leaner for them, and they can test their services. Then probably the next step is America, and then after that it comes Europe. So that's our observation. The really global players are starting with Asia, then moving a little bit to the US, and then Europe is for them really the last regional rollout due to the harder regulatory environment for them. So that's our observation here.
And maybe a different angle, and you already pointed to it, I know, is you see that, first of all, it often starts with not investment, but it starts with account and card payments, because simply the regulation allows it. And then you see these new providers, these non-financial distributors, start to really hone into a certain group of people. One example in Germany, for example, is Engel Völkers. They're one of the largest real estate brokers. So they are at the point of context when investments are being made and money is being paid out in case of a sale of a real estate. So they start with account and card. But I'm very sure that they're going to start adding on mortgages, and then as soon as they can, they will start adding on investment advice. It's just such an interesting target group, and that's then where it gets really really uncomfortable for the established players, because these are also very much highly sought after client targets for the established players. They don't want to lose those.
An interesting story is, in fact, we had a discussion with one of them, and I can relate one of the feedback they gave us when we asked them, why do you want to do it? The response was, okay, as you all explained, the opening account, credit card is already there. But what they said is, yes, it gives us interesting income and then a new relationship, but it's still very volatile. The wealth management for them is a way of increasing the stickiness and the loyalty, as they feel as soon as you start becoming in one shape or form an advisor, then they become sticky and they become more and more loyal to this financial. This is what they told us. This is the reason, even more before getting more money or making more, let's say, fees, getting more fees, is increasing the stickiness and removing the volatility or the aspect of those customers. This is what they told us.
And for some individual offerings, so retail offerings, so cards and accounts are easy, but there isn't as much of a revenue opportunity, as you said.
True.
So it's not. I mean, it's the key to the game, but it's certainly not the goal. And that's where we see a lot more distributors are looking to go beyond that. As Sven said, with going on to mortgages and then investment products, it makes sense for real estate brokers to look beyond cards and accounts, because You know, if you open an account, how much money are you going to make off that? I mean, you saw Tesco's in the UK. It's not embedded finance because they had their own banking license, but they got rid of their offering because they found that only 12% of their customers used that as their main account. So you're not going to make any money from having people's second or third or fourth current account that they don't really use.
With that, I would like to thank you, our guests, for participating in the panel, and you for listening. Thank you.
Thank you. Thank you. Thank you, everybody.
Thank you.
Thank you very much. It was great.
Thank you.